Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on gregschnell.com as well as StockCharts.com. So the market continues to rally. Life is pretty good. I want to cover off something different today, and that's the art of selling. There's two different types of selling. One is selling when you're losing, and one is selling when you're winning. And how do you manage those two? And so I want to cover that off in a little bit, just to make sure that when we talk about selling, a day trader and they want to sell, I'll call it a rally that goes up for 10 or 15 minutes. That's not what we're talking about today. We're talking about big runs, like when Tesla moves 300 billion in 2 weeks. Is it time to take profits or something like that? It's more about a big picture goal, and I think the real question for everybody is you have to decide if you're using daily charts or weekly charts, and we've talked about that in the past. But the idea being selling big winners is hard because you've got so much money that you've made in one stock and you want to hold on to it, and you keep thinking it's going to run to the moon. And then the next one is for investors who just bought something and it turns down immediately. They bought a breakout and it failed or whatever, and it turns down, and then they don't sell because they still think the trade is right. So we've got a couple of those different types of conditions. So that's what we're going to cover off. If anybody's interested in what we do at gregschnell.com, you can go over to gregschnell.com/explore. And for just $4.97, you can get a 2-week free trial and go in and see what we're doing there. Lots of the discussions we have today or in other episodes of Market Buzz, a lot of the ideas come from questions I get asked by current clients. And so we try to make sure everybody's set up for success. Okay, so I'm going to take an example, and this is Blink. And Blink had a stunning run-up, a sideways consolidation, another stunning run-up all in 1 week, probably a gap, which would have been difficult to buy. But even then, it ran up for another 8 or 10 weeks, and then it's been on a continuous decline. And so one of the things that is helpful is to pay attention to some of the indicators, specifically what you're trying to trade. And again, if it's a daily or a weekly, I'm going to use weekly charts, but you can do these same principles on daily. So first of all, let's talk about something. So the scooter ranking gives you a percentage ranking of a trade compared to or a stock compared to its peers. And so in this case, it's a small cap. And the idea being by only comparing it against small caps, at least you've got some sort of fair comparison to try and decide whether this is a strong stock or not. And the idea being when it's really low, so it's underperforming everything else, all of its peers in the small cap group, this stock is in the bottom 10% of them. So in any given period, you'll have outperformance. The real question is, they could all be falling, and some are falling less fast than others, so those would be outperforming. So they'd have a higher scooter ranking if everything was falling. But conversely, if everything's going up and the stock you're owning is not, then it's getting left behind. And so much like in a basketball game, you can have 12 and 20 point runs. That's what the scooter ranking is showing you, who's winning lately and how much. And one thing you'll notice is that there tends to be a pretty strong trend in place. And when that strong trend starts to crack, you need to at least have something to help you identify that. So first of all, the scooter ranking, I have a blue line here at 75. And what I like is when it runs up and stays above there. Now, as it came down here, this was kind of a 1 week move. That's really hard when it's trading down into the bottom corner and it bounces up. And then basically scooter ranking stayed at 0 or down below 25. So that still makes it weak. And then you had a three-month run where it went from 156 to 415. That's pretty heady. And the scooter ranking was starting to look really good. But you'll notice something on this chart. And let's just take big picture stuff here. Here is a typical line that we can draw. And if we just put it right on the 50%, even then, that gives us an idea. For almost 2 years, this stock is living on the bottom line of living below the line of 50%. And then what happens is there's brief periods of enjoyment where it goes up and it spends 2 or 3 months up here. And you can see during that period, it was either up or flat. And then once it fell below the 50% level, it was pretty weak again. Briefly tried to get going and then failed. Briefly tried to get going again and failed, and then got going and stayed up there for months. And then it failed, came back below the 50. So just using a 50% line on your full stochastic on a weekly basis gives you some, I'll call it wide variety of bull-bear indicators. Now, the second component of that is how helpful is that if it's already started to drop and now it goes below 50. I fully agree. So you have to use price here. But, if we had a really strong stock like NVIDIA or something like that, it will stay in the top half. And you can see the scooter ranking here did really, really well for a whole year, basically from June of 2020 all the way through to June of 2021. But we all can see that the stock topped in the middle here. I'm going to talk about that. I actually find the scooter ranking is better as a buy signal than a sell signal, but still it gives you an idea when the stock is outperforming everything else, it's going to be rated at 99.9 or above 90%. And when it's rated that strongly, money is being attracted to it. So investors like to find outperformance. And so when something is outperforming, it's behaving better than every other stock, they like to get it. Now, this stock still ran up, pulled back hard, ran up, pulled back. And these are not insignificant. $11.50 to $7.33. This is a $4 loss on $11. You need a stomach of steel to try and hold that with any sort of size. So let's just say, you had the 5 stocks that one of the favorite TV analysts talks about, how you should own 5 stocks to be diversified. The problem is if you have one of those stocks that drops $4 while you're trying to hold it, that's a pretty significant hit, or 30%, and to try and keep your portfolio going up. So you might remember that in 2020, it was a pretty much up elevator. September and October, the stock market wobbled a little bit. And then in early November, everything took off. So when the vaccines were announced. So the big thing to remember here is, what are you trying to achieve? And I think more importantly than anything, this purple area is the relative strength compared to the S&P 500. So it's got the ticker symbol, the S&P 500, and the colon indicator in between them saying compare these two. And so if the S&P 500 is up more than BLNK is that week, then it'll actually be sloped down. And then if BLNK is outperforming the S&P, it slopes up. So what we see here is during this period, this was a pretty heady run, and this looks really good. And then you can see that this broke in here. If I drew a trend line here, it broke and it came back down. Well, that was at least a clue that something that was outperforming had stopped outperforming. It didn't do anything for 3 months, and maybe you plan to hold for that. But what you don't know is it going to pull back 30% or 70%. Those are difficult decisions, and the stock had been all the way from $1 to $14, so it's really hard to say, pick a date and tell me how far you're willing to have it pull back before you sell. And what you don't want to do is give back all of those wonderful profits you endured, and then with the stock wiggling around 10% a week, and then to have it all go away. So we need something to give us a clue. So if I back up this chart and just stop here, you're going to see that this little trend line broke. And when it broke, that probably wouldn't have been a bad place to take profits. And most people would have been happy if they got in somewhere, I'll say in around the 250 or even above the 335 as it broke out here and got up to 1450. That's pretty heady. It went sideways for a while. $10 is this line right here. So even if you got in at 350 and went to $10, it was a double, and you held it for a couple of months. That's pretty nice. Now we go over to the other example here where you have a big uptrend in your relative strength where the stock is outperforming, and this one's pretty steep. So even if you sold on the steep part, you would have sold in here somewhere. And if you waited and sold for, I'll call it a more gradual slope on your relative strength outperformance, it is kind of nice when you have two anchor points and you can just kind of draw your trend line in. So you draw in a trend line. If this is going to start to crack, then you want to let go, and at least some of your position capture some profit. And what we see here is as the stock is trying to break out, the volume is muted. We had good price action early, and then we had, I'll call it average price action relative to this, and then we had super strong price action, and then it went back to being muted, and then after that there was very little interest in the stock, and just in the last 2 or 3 weeks it's starting to pick up. We have a PPO buy signal. There's all kinds of things that could make us want to enter this stock. Now, ran from 34 to 40 and pulled all the way back. Hard to own that. But at this point, you're starting to see that there's some people who want to own this thing. And even if it goes on a wild ride, if it pulls back any more, perhaps to the 10-week moving average or something, you can get involved. Actually, this is the 40-week moving average in light green, and the 10-week in blue. So if this starts to pull up, because price is pulling it up, eventually price is going to come down to it while this is coming up, and you're going to end up in the $31 or $32 range. You're still below the long-term average, and that's kind of where price is sitting at the time of this recording. But when you look back historically, that's not a bad place to enter this stock when it's moving above the green area. And if it fails at the 40-week moving average, you probably want to let somebody else own it. So we've got a couple of criteria. One is that if the scooter ranking is starting to improve, we probably want to think about it. If the relative strength is starting to improve, that's really important. So it's one thing for the stock to start moving up, but the scooter ranking is telling us it's actually moving up faster than its peers. So that's a helpful piece of knowledge. We have some volume coming into the stock. All of these things are valuable contributors to the information we need, but we need to know when to sell. And one of the big things for me is when this relative strength trend breaks, when my PPO gives a momentum signal and we have a longer term PPO trend line break. All of those are important. So let's just jump into this chart and actually mark it up a little bit more thoroughly. So we have a relative strength line here, and on our PPO momentum, we've just got a sell signal right here where the two lines cross. That's not a bad place to take profits. We also have either this relative strength line or, we might have got kicked out here, but even if we straight it over to here, you're in the same sort of zone for selling. I think if you caught a move up from, I'll call it $10 to $64, you'd probably be happy. If you start to get to some sell signals and want to take and use those sell signals to help you sell, I think there's a pretty big advantage there. So we have this particular trend line as well. And this is going to get you out in the $40 level. But what we're saying here is now you're falling below you tried to go back above the 10-week and you fell, and you have an upsloping trend line so that you want to sell. This is quite a ways from the high. You've given back 30%. So I like to try and find something cleaner than that or more aggressive than that. One thing that's going on here, this volume spike of 150 million shares is the biggest in years. And you might remember that during the November to February time, we had kind of everything related to electric vehicles break out. What that tells us is we're getting into some pretty heady territory. Now the stock continues to wobble, but you start to lose your relative strength. And all of a sudden when the stock is underperforming the S&P 500, so the index keeps going up and this stock starts to go down or sideways, this is telling you that the aggressive outperformance is over. And again, it might drift sideways like it did in here. But the real question is you're trying to capture the profits before they're gone, and you don't want to wait for a 15 or a 20% move down in a week to kick you out. You want something better than that. So this trend line is going to be a help for me, but it still would have got me out, I'll call it mid-February. This relative strength line would have got me out early February. So I think if you're looking at the charts to help you find sell points, two big areas for me are when a big long-term momentum indicator trend is breaking. The relative strength is probably the first thing that's going to break, and I would want to make sure that that holds true. So that's a big winner, right? And now on the other side here, we're looking for a buy point. This video isn't a buy point video. It's about how to sell, so I'm not going to cover that off, but I like almost everything I see here, and we could talk about that at another time. Now, let's go on and cover BioNtech, and I did an article. Actually, let me go back and just do one thing that makes this really easy. I'm just going to change all of the settings for all of the charts in this chart list to a wider look. Now, here's BioNtech, and the reason I want to cover this off is that you have a stock that is uptrending nicely. There's a trend line holding. It's all good. Momentum indicator is weakening, but your relative strength index continues to go higher. And depending if you're trying to capture the whole move or just a piece of the move, all of those will be different in terms of how you set your selling. But, you know, most of the time when this scooter ranking effort, after it's been up there for 6 months and starts to slip, I'm more likely to take profits. I'm not going to hang around and let somebody else work the stock lower before I get out. But I will say here that the stock is breaking after a big climb. The stock is 130, 120. You've got a trend line down here. It starts to break out. Relative strength trend starts to improve and break out. Scooter ranking pops up to 99. And our PPO also has a trend line that's down and is starting to turn up. That's how you're going to get in. Now, the other side of it is how do you get out? And so you have this relative strength trend line. You can either run it long, or you can say this is a parabolic move. Whenever this cracks, I want to get out to try and get it as close to the top as you can. The stock did go from $12 to $500. There's probably not a bad reason to take any sort of profit out of here. When you have that kind of explosive move, do you really expect it's going to do that again and go to 2,500 or 5,000 in the next year? Maybe it's possible, but I think I'd rather try to lock in the gains that are significant at the time. So when I get my PPO sell signal, my trend line sell signal, my relative strength sell signal, all of these are lining up in a pretty close fashion. I'm looking for the exit, and I want to make sure that I'm using these tools to help me decide. Now, the scooter ranking doesn't break down for another 2 months, but it's at one of the lowest levels in a year and a half or 2 years. Do you really want to get back into this stock if now all of a sudden it's gone from being a best performer to nobody really caring about it? Okay, let's go check Peleton as an example. And we all know that Peleton is broken, but I want to remind everybody what happened in this stock. So it IPO'd in September before COVID was known about. The stock was basically wobbling around. It got pulled down in the whole COVID low thing. And then at this point in time, it starts to break out through $37. And as it breaks through here, you're now making higher highs. So the question is, if you bought it here and it pulled back, maybe it talked you out of it, or if you saw it break out and fail and now it starts to make it again, now all of a sudden you've got this nice base building and it's starting to climb out of the hole. Scooter ranking is at 80. Your relative strength had a downtrend here, and now you're getting into the stocks. Whoops. So anyway, I'll just leave that one there. And then we can draw a relative strength trend line. Now, maybe it's down here, maybe it's up here. It's whatever you want it to be. Now, how tight you manage that. But what we see is the full stochastic pulls back, runs up, and barely stays up there anymore. Starts to lose its momentum quite quickly. We have an uptrend in price. We could use this one too, if you wanted to be more aggressive. and it kicks you out and then turns around and goes on a final run, well, you can decide if you want to get back in. This is still a pretty heady gain from 38 to 140, $100 gain. I think we'd all be happy with that. But the bigger question is, if you held it for this trend line and either off here or off here, doesn't really matter. You're going to have some sort of a trend line violation very closely. The idea being, as soon as this is starting to violate, you're up above the prior high at $140. Now you're getting to 171, and you're starting to break down through there. As this is falling apart, what's your relative strength doing? It's saying the stock is no longer outperforming the S&P 500. In here, it was underperforming. It had 2 weeks of wonderful price action and then started to underperform right away. That's not what we don't want to stay in too long. And I remember the arguments at the time. And my argument was, look, this thing they've had unbelievable growth. We've just had the vaccine announcement in November that the world is going to get better soon. And are they really going to maintain their whatever extraordinary growth rate they had going on? And they were buying new sports equipment manufacturers. They were going to rule the world. And, famous commentators and investors on TV saying, this is just a pullback. They're still going to have the subscription revenue and everything is fine. I agree they might even have that. But the problem is that the growth rate that you're paying for, which is what this trend line represents, is no longer going to happen. And so when you start to get sell signals, you want to exercise your right to move along. So you have something going up $100 in 6-8 months, a triple. And the question is, are you still going to wait for another double on top of that? Because it might be a 10-fold move off the lows, but it's only a double from where you currently are. If it moved up to, let's say 380, which would be a 10-fold move. So the point is you've made the biggest part of the gain, and now even if it did make another double, you can draw some trend lines here. You could try to pick it up at another point in time. But when you have a big heady move, you want to figure out how to take the maximum amount of profit, and you're not going to sell on the top candle, or very rarely you are. But if you don't have a method to take profits, you'll listen to everybody on TV telling you that it's a good idea to keep holding and holding and holding. Now, if I wait for this to start making lower highs and lower lows, I'm out here in February. That's okay. I could also have just sold on the break of this trend line here. I'm going to be out in mid-October. Whatever, I got a trend line break, so I'm leaving at, call it $100 just to pick a number, 120. The issue here is you've still made a massive amount of money, and you're able to capture the gains. Why not take that? And if you still believe it's got room to run, it gets really tempting when it makes this 2-week run, and then there's people chasing it and trying to buy in it. And guess who's selling to you all through this period in here for 6 weeks? Institutions. They're literally trying to hold up the price and get people to take the shares off their hands as it sits up there. So the goal for us when we have these big wins is to try and figure out how to take a huge profit. Now, here's Vestas Wind Systems. I think renewable energy is coming at us fast and furious, so I would expect this stock to do very well. So what do we see here? We see a big uptrend that breaks in early January. And we see a full stochastic that was holding above 80 start to break. We see a relative strength trend line starting to break. We see a scooter ranking starting to fail. And so all of these things are clues. Look at what's our PPO doing down here at the bottom. It's giving us a sell signal. Here it's a touch and go, and then here it actually gives our sell signal. So we have to decide why we would keep it after it gives us this opportunity. We're getting all of these signals that the move is over in January. And so why wouldn't we take that? And the real answer is, if we don't take it, so call it $15, it goes down to 10. So now we've given up half the gains we made. And then it jogs sideways, does nothing. The relative strength is trending the wrong way. It's trending lower. And so we don't have anything going on here. There's no real reason to own the stock. And it continues to make lower highs and lower lows. From this recording during the last week, this thing drops from $15 to $11. So you've lost 30%. And then you've got your PPO momentum indicator going below zero. If it's going below zero, something different is going on, and we need to be aware of that. So to highlight kind of the things that you can use to help think about selling is when something is outperforming, you're looking for the end of the trend. And again, don't have the belief that you can, let's call it Tesla. It runs up to $900, pulls back to $700, goes up to $1,300 and pulls back. There's a few of those winners in the world, but most of the stocks don't behave that way. Once their big run is over, they'll go into a period of quiet for a long period of time. So when your relative strength, when something that's outperforming the S&P starts to fail, to me, that's a clue. Your trend line, if you can draw one, because price could be choppy, but if you can draw one, this is an important place to consider. And if your momentum indicator is also giving you a sell signal, a combination of all three of those, in this case, the full stochastic, also giving us a sell signal, would make me run for the hills. So let's go pick up a stock like Tesla and just put it on here because we've just had a recent run. So the stock had a big run up, sold off at 900, came down to 546. You have a trend line down here that's starting to break. You buy back in, it's run up. Now it goes up to 1250, and now it's starting to roll over. And what's happening here on your relative strength? You could either draw a trend line and say this is going to keep working. You could sell because you had this really steep rise and you're just trying to capture the move that you got from 700 to 1200. What's wrong with taking $500 a share off the table? Even if Tesla is the greatest company in the world and it goes on to 3,000 a share or 10,000 a share, there's nothing wrong with taking profits as it goes and then buying it back at a lower price later. So for me, the things I want to think about on this chart are, where does this relative strength trend line end? And in this case, it could have been here. That's a little late. I would have called this a parabolic move. I think if you go back and read the articles I wrote at the time, that's what I would have used. And so I would have had one here, one here, one here like this. And when this trend line starts to break, that's going to be a clue for me that I want to just move along and take profit. So I want to use a parabolic arch or something like that to help me get my trade right when I see something going parabolic. We have the same thing now. Whoops. Where Tesla's breaking out to the upside, it's going parabolic. And now we want to try and find some sort of trend to help us get out of this thing with the maximum amount of profit. And don't be afraid to lock in some of that. And if it starts to break, you want to leave. I have another example. Let's just get out of here. I have another example of nat gas, which just did the same thing. And when that trend line is starting to break, this relative strength trend is starting to break, you just want to get out. Now, it's still holding up in that area, but you don't need to live through those 15% moves every week if you've got the majority of the run off the lows. So hopefully there's some ideas there to help you find selling points after making big gains. I think the big thing to recognize here is see how organized the price move is, and now here it gets into wider and wider swings. That usually happens at a top that makes you recognize it. Thank you for taking the time to join me on Market Buzz. Market Buzz airs Wednesday at 10:30 a.m. Eastern. You can also see the recordings on StockCharts TV YouTube page and StockCharts on demand. Thanks, everybody. Bye-bye.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.